And next, I would like to introduce a couple new speakers over to the crowd. And let's give a little round of applause for Kelsey, who's producing this whole event today, bringing everybody on and off. Next up, we're going to have Mike Novogratz and Peter McCormick. Guys, I see you. Go ahead and turn your videos on, your microphones on. Everybody is very eager to see you here today. And something that I'll say too is, again, I'm like a stock market guy. Stock market has been my passion since early high school. Crypto was always something that I had heard about anecdotally, but never really was the huge believer in, and didn't have the passion that all of our speakers have had today. But that changed a couple of years ago. I read a profile on Mike. I was familiar with his background from the stock market, the typical market days. And I'm like, okay, if he's getting interested in the crypto world, I probably should be interested too. So guys, I will go ahead and get off of the screen and let you take it away. Very honored to have you here at a Benzinga Bootcamp.
Thank you.
Thank you. Novo, how you doing, man?
I'm doing all right.
This is the first time we've met.
Indeed. So we're flying blind.
I think it's a bit overdue. Okay, so listen, they told me this session was going to be the macro case for crypto, but I'm going to refine it a little bit and have it as the macro case for Bitcoin. Are you okay with that?
I'm good.
All right, man. So listen, look, strange year, very, very strange year, I think, for everyone. But before we get into that, everyone knows your background, right? Everyone knows you have a long history of investment. But what was it that first attracted you into Bitcoin?
So I got a call from Pete Brigger, actually, my partner at Fortress, who was as far away from a speculator as you can be, right? He runs a distressed debt business. And he used to always say he buys dimes for nickels. But he had moved to San Francisco, and he was in a group of people, his YPO group, and Wences Casares. He's really kind of ground zero for a lot of people in Bitcoin, patient zero. And Wences was talking this story. So he called me, he said, "You heard of this?" And I'd never heard of it. And so I literally went on the internet, searched Bitcoin, and it just real quickly kicked in that I was like, it's a cool technology. Remember, this was in 2012, and so the European financial crisis was in full swing. We'd already had the global financial crisis, and we were in QE1, QE2, and there was a real fear that people were going to debase fiat currency. And so I thought, we got a macro backdrop. We've got anarchists and libertarians and cypherpunks all participating, and the Chinese were starting to buy. So I literally originally bought it just as a speculative, a yo bet, saying, hey, we should buy some of this. And as it turned out, and it's fortunate we made a promise not to speak about it publicly. And I mistakenly was at a conference. I didn't know the press was there, and spoke about I bought Bitcoin. It was a cool asset. It was going to go to 1,000, and I got on the cover of the FT the next day. And I was like, okay. And so then I started getting asked all the time to talk about Bitcoin, and really had to do a whole lot of homework to try to understand how it actually worked. And so as I dug in, and Fortress got more engaged, we called Dan Moorhead from Pantera, who was sitting on the sidelines. He was a college friend of mine. And Dan looked at it. He was like, oh my God, it's going to change the world. And so he was putting more money in. We put more money in. And all of a sudden, we ended up getting a fairly large position and deciding it was going to be an important part of the financial landscape in the future. And so it was kind of one of those, lucky that Pete ran into Wences. And, Pete was lucky that I was a macro guy. And we were both lucky that Dan was so convicted, because we were richer than Dan. So we had to put at least as much as he put in. And he put a big bet in. And so, you often do well when you get a big bet early. And so that's kind of got me into crypto.
Has your conviction with Bitcoin changed over those years? Is it the same? Has it grown?
No, it's changed a ton. It's changed a ton. I first did it as a speculative thing. I didn't know if it was going to survive or not. But I realized that it had such a good story, people would buy it. You look at a lot of the stocks in today's stock market, they're story stocks. Some will actually live into their story, Tesla's a pretty amazing company. It doesn't mean it should be at such a stupid valuation. But Bitcoin had a story to it. And so I thought that's what I invested in the first time. And it's now gone through the great crash of 2018 and kind of reemerged from that crash. And I think we had a huge inflection literally in this, March, April with COVID, in that COVID gives such a strong macro backdrop, tailwind to the hard asset story, to the Bitcoin story in particular. And we went over the Rubicon, we went over the hill in terms of being established as a real asset. When Paul Tudor Jones bought it, and not just bought it personally, but bought it in his fund and wrote a paper about it, that was an inflection point in my mind. And it's an inflection point because if you think about what Bitcoin really is, it's not the code that gives it value, right? But we could take the code and make it Novocoin and it probably wouldn't have a whole lot of value, right? We could fork it like a lot of people have tried to fork it. None of those things really have retained a lot of value. What gives it value is the social construct, right? I think it's valuable, you think it's valuable, therefore it's valuable. And so that started with a small group of really passionate Bitcoiners, and it's been growing and growing, right? We think there's over 100 million people that own a piece of one Bitcoin. That makes it the single largest distributed asset in the world, in history. And that is only going to grow. And so I am so bullish right now is that I see all of these companies like ours, like many others, building easier access for people to participate in the Bitcoin ecosystem. And so, as you get more people involved and more people believing, because it's a belief system. It's a belief that this is going to preserve its value because there are only 21 million Bitcoin. There will always ever be 21 million Bitcoin. They're not making any more Bitcoin. 3 million are probably lost, and there are only a couple, million more to mine. Like, it's such a powerful story that if more and more people believe it, the price only has one direction.
Yeah. So you talked about an inflection point there. That also must have been compounded with what happened with MicroStrategy a couple of weeks ago, which kind of came out of nowhere. It just kind of hit us all like a steam train, and I think we've all been trying to kind of process it. But what was that like for you?
One of my favorite stories of the year, and I haven't done that yet. I have it on my list of things to do. Give them a call. Listen, here's a guy who's got a public company with a ton of cash and is looking and saying, well, if I put my money in cash, it's not nearly as safe as it used to be because we've got the printing presses going. And therefore, I'm going to take this massive bet and rebase myself in some ways, right? Right now, when you go around the world, when you're in Saudi Arabia or in China or you ask someone what they're worth, they give you their worth in dollars. They just do. I've lived in Hong Kong for 7 years. I've traveled. I've been in 92 countries, and everyone thinks of their net worth in dollars, right? We're a dollar-based world. And so all of a sudden, here's a guy that says, I'm going to think of my base in Bitcoin. And maybe in 20 years or sooner, we'll all think of our base in Bitcoin. That's a big leap to make, but it's pretty cool. You found a guy who runs a public company that's already made it. And so I think it's a big deal. Now, one of my favorite videos I ever saw was at the TED conference. And it was a guy dancing like a wacko man. And he's out on a hill and he's dancing like a lunatic. And all of a sudden, another guy comes up and starts dancing like a lunatic. And then a third, and then a fourth, and then 500. And it's often the second guy in that creates the movement, right? The first guy is inspiration and the second guy is the movement. And so I'm waiting for the second corporate to come and say, we're doing this, because then it steamrolls. And so it's a pretty important, to have the leader. I give him all the credit in the world. Same thing with Paul Jones. There are lots of other hedge funds that are coming in, but they're not being as public. And so we're hiring, we're going to announce it soon. We're staffing up to better connect to the institutional world. We talked about being the institutional bridge. And I was like, okay, I kept saying the herd is coming. And I was wrong. It was so slow to come. Now the herd is actually coming. And I see it. I'm getting phone calls every day. And so it's left me very bullish on the overall space.
Well, I saw your advert in the FT.
Yeah, that's I was like, we're reaching out now. This is, it's now a legitimate macro asset. And 2 years ago, it was in what I call the venture sandbox. It's right, quite frankly, where everything else in crypto, I believe, is still. Like, I think there is Bitcoin as a macro asset, and then everything else, which is really cool. I'm spending a lot of time in DeFi right now, but that's all a venture sandbox. And that's not ready for institutional money, right? It's ready for really smart people, and there's lots of money to be made and lost. There's capital to be deployed. But when you're thinking about mom and pops, when you're thinking about institutions that have a fiduciary responsibility, they need a lot of surety to get there. And Bitcoin's made it. And that's a big, big deal.
So explain to me, because if you were in 2012, you've obviously got a lot of buddies on Wall Street, your old hedge fund buddies. You must talk to them all the time, right? You must have lived through an evolution of these conversations where at first they thought, like, Nova, you're crazy. What the hell are you doing? And then maybe like a few years ago, they're like, well, it's not for us right now. And then maybe like now they're asking you questions. How has that conversation evolved for you over the years?
It went from trying to understand the generals, the Persian generals problem, and trying to get into like how does a blockchain work and this dual signature, and you can't afford that, the kind of technology piece of it that, was difficult because you had to keep reading over so you understood it yourself. To safety, Mt. Gox got hacked, and this guy got hacked, and the Canadian, guy faked his death and ran off with $500 million. And so it was kind of a Wild West thing. Hey, you're kind of crazy, but glad you got in early. To all of a sudden you had ICE, through Backed and Fidelity, get into the custody business and saying, okay, wait a minute, it's safer. And so it's not that people were necessarily late. Given their fiduciary lens, they had to wait until it was safer. I always tell people Bitcoin price would be a ton higher if it was easy to buy, right? It's still a pain in the ass to buy, right? You can't call Goldman Sachs or Morgan Stanley or JP Morgan and get on the phone with your broker, or E-Trade and get on the phone with your broker and say, buy me some Bitcoin. And we're, ironically, or interesting enough, we're pushing those guys to get involved. Even though it will be kind of anti-competitive against our business, I just think it's so important that this asset continues to go mainstream, because that brings in all the new players, right? You remember, the bulk of the wealth in the world is held by 50 to 80-year-olds. Like, they don't, most 50 to 80-year-olds have a hard time on their iPhone, let alone setting up a MetaMask wallet or a Red wallet or some Coinbase account. It's just not what they do. They pick up the phone and they call their broker. And so that's the next big attack vector.
What's stopping these big brokers getting in?
They have a lot to lose. This has been a small, we still have to, within our industry, we think we're giants, we're awesome, we're killing it. $200 billion is less than a fifth of the value of 8 different stocks out there. And if you put the whole crypto industry together, right? So we're like one stock. They have lots of stocks they participate in. And so we're just not important enough yet. We're getting to become more important. And what's going to get them in is clients saying, hold on, let me get this straight. You'll sell me Hertz claims, a bankrupt company that is now trading at a stupid price because, El Presidente pumped it. And you'll sell me those, but you won't sell me Bitcoin, which has got a $200 billion market cap. Like, what gives? And so as real investors have that conversation with the heads of those banks, the banks have to have a real answer for it. And so we're starting to see that shift quickly. And I think in 1, 2, 3 years, you'll see all of these guys getting more involved. The other thing that's going to force them is stable coins, right? As we get central bank issued digital currencies, depending on which way they go, and as they grow, if you're trading euro versus dollar on the FX desk and someone wants to trade it by a stable coin, what are you going to say? I'll do your fiat, but not your coins? It makes no sense. So customers will demand they're able to do that. And so, listen, it's a big infrastructure bill, right? It's a completely different infrastructure to trade coin than versus trade fiat at this point. And so they're all gearing up to figure out customer demand. And it's really customer demand that will drive their action. And we haven't been a big enough industry yet to matter to Goldman Sachs or Barclays or to Morgan Stanley.
Yeah, Kling, I don't know if you know Travis, but he said one of the problems for a lot of investors is that Bitcoin's still too cheap. There's a lot of people who won't be diving in until Bitcoin's over 50,000. It's just too small a market cap for them to care.
You know, I think it gets to 50,000. I've been thinking a lot about wacko predictions that people make, and now I'm like trying to put real framework around it. So I see demand coming in on a consistent basis, not all at once because company decides they want to look into Bitcoin. It's a real process to change documents sometimes, or to really do their own due diligence on the custody, and so it's not an instant hit the button thing, but it's a backlog that's moving. You know, gold, I'm bullish gold given we haven't talked about the macro backdrop, but it's pretty obvious.
Yeah.
And so if you just think Bitcoin gets to 10% of gold, that gets you to 50,000 with gold staying here. 20% of gold would be 100,000 with gold staying here. And I'm pretty convinced gold's going to go higher. And so as you shift gold up 30, 40%, which seems reasonable, you shift Bitcoin, you know, those numbers aren't fantastical anymore. A couple of years ago, people said that. We were like, well, you just pick any number, right? But now there's a kind of framework around it and the money coming in. And so I certainly think in 3 years' time, we could be at 50,000 or higher.
Well, let's talk about the macro backdrop a little bit. I know it's kind of obvious, but at the same time, you do have a lot of experience of trading in the markets. You know, you've lived through you've probably lived through a few kind of scary times, but like, how does what's happening right now compare to, you know, previous financial crisis, previous, you know, I know 2008 and I know now, and now seems significantly worse than 2008.
Well, there's a couple of things there's one thing in particular that makes us different than anything anyone my age or even older has lived through. And that is we lived in an era of central bank independence. Independent central banks was a hallmark of the global financial system over the last 50 years. And now we don't. We have the Treasury and the central bank becoming one. And none of us understand what that means yet because we've never seen it before, right? If you're Stan Druckenmiller, who's the world's best macro investor, or one of the world's best macro investors, or if you're the young guy who's getting started, you haven't lived through a time when the central bank and the Treasury are one. And that really, you know, there's all the printing press goes burr. That's exactly what's happening now. And so it can.
What do you mean by they're one?
Well, the Treasury prints big deficits and they're funded by the central bank automatically.
Okay.
And so there's really not independent central bank because if the Treasury says tomorrow, I'm going to print another $4 trillion because why not? The central bank will buy them for me. So listen, right now, the dollar's depreciated some. It hasn't gone into free fall. We're not Venezuela, right? We're not Weimar Germany. The Treasury market, you know, 30-year Treasuries are still well under control. They never seem to move. And so, in essence, everyone's getting away with it. But Japan has gotten away with zero rates for a long period of time. There's a thing in economics called the Minsky moment. It's when you hit that inflection point and confidence breaks. And you don't know why, but all of a sudden the yield curve steepens and the dollar depreciates and people say, oh shit. So we have a big budget deficit, right? A growing national debt. When you have interest rates at 0%, or when you have long-term rates, right, at $1.25, not that expensive to fund that deficit, right? I borrow as much money as I can right now. You know, I would recommend to everyone out there, if you can borrow term money, you should borrow as much as you can. Like at one point, you know, zero interest rate loans or equity, you know, like in a lot of ways. And so the government's bought a lot. It all works for them if rates stay low. But because they haven't rolled all their debt out long, if rates go up, all of a sudden, how do they pay it? All your taxes all of a sudden get used to do nothing but pay the debt. And so that doesn't work. And so we're in this weird disequilibrium equilibrium. They've got to keep rates low and hope the economy comes roaring back and they slowly get the deficit back under control. There is certainly a chance that can happen, but there's a growing chance that won't happen. And that's why all the macro guys are saying, I need some hedge. I want to be short the dollar. I want to be long gold. I want to be long. Like, my base case is not that the US dollar turns to toilet paper, but the possibility and the probability is higher than it's ever been.
Yeah, I interviewed a lady called Lynn Oldham recently, and she was saying that of the 52 times a country's debt to GDP ratio hit 130%, she essentially called it the event horizon. There's no coming back for that point because politically can't implement the policies that would allow you to pay off that debt. It would be so unpopular that you would lose power. So she says essentially we're coming to the end of like a more like a super cycle of like previous 4 decades of boom and bust. And she thinks over the next decade we're most likely to see a currency devaluation.
Yeah. And so listen, Ray Dalio did some brilliant work on this after 08, 09, and I think he called it a perfect or a graceful, exit of this thing. Like, in a perfect world, if you could get inflation to 3%, maybe 3.5%, but not lose control of it, you would slowly depreciate your debt away.
Yeah.
You'd grow. There's a very narrow path that you could get yourself out of this. The hard part is inflation's like a caged dog when it gets going. It's hard to say, hey, we'll allow you to run 40 yards down the yard, but don't run 45. And, the Fed is playing with this now. Hey, we're going to let inflation run over 2%. In a lot of ways, we've had perfect price stability, right? Inflation's been 1.5 to 2% for the last 10 years. And so the Fed's been doing their job. But now it's like, yeah, we need you to get inflation a little bit higher so we can start depreciating some of this debt away. Let the dollar weaken a little bit, but not go into free fall. And hope the economy picks up. Maybe, right? That's a possibility, but there's a lot of room for mistake there.
Mm-hmm. Well, the pandemic changes a lot because with a lot of people out of work, growing unemployment, we have lower production.
We learned in 16 that, first with Brexit in 15 and then with Trump, that there was a new regime needed, right? That the old story of globalization, the whole world had kind of bought into it, ended. And what's this new story, right? The rich-poor gap keeps getting wider and wider and wider. We have now, even the pandemic's made it worse. And so we went to populist right? Trump was populist right. You move all the way to populist left with AOC and Elizabeth Warren. And that's not the candidate. That's the impulse, because things aren't fair right now. They don't feel fair. They don't feel like, that Jeff Bezos is worth $250 billion and so many people, can't pay their rent. Just intuitively doesn't feel fair to people. And so the pressure on politics is going to be, let's reduce people's student loans. Let's make college free. So I'm not saying that's what the Democrats will do. There'll be a tremendous amount of pressure. And so it's going to be really hard to put the fiscal conservative belt back on and say, no, it's time that we tighten the belts. We just won this election and, we're going to tighten the belt. And on the other side, if God forbid Trump wins again, his whole life, he's never tightened the belt, right? He's in other people's money gun. Been busted a few times in the casino business, came in. We had a good economy when Trump came in, and he sugar-highed it. He, cut taxes and raised spending. It's fun to do that, right? Everyone, and so then we were at a 5% budget deficit before COVID. You're supposed to be at a 5% budget deficit when you're on your knees. We had full economy, and as he said, the greatest economy the world ever had, and we were on a 5% budget deficit. That was insanity. Insanity.
Have you mapped out what you think will happen depending on who wins? Like, do you think there's a lot of fragility ahead, and therefore it doesn't really matter who wins, or do you think it's different for us economic.
So yes,
It's the Denver.
Outside of my Galaxy,
Yeah.
digital hat, we have a group called Galaxy Gives, which does a lot of philanthropy. We got into democracy this year. Like, how do you help in the election? Secure people's right to vote and whatnot. And so I've spent a lot of time thinking about this. Listen, Bloomberg recently got involved and says, I'm going to put $100 million into Florida. There's one specific reason. Florida is a state that counts all their write-ins early. And so the night of the election, we'll know who won Florida. There'll be no debate. There'll be no, you didn't win or we did. And so if the Democrats win Florida that night, election's over. There's no math that Trump can win the election without Florida. If Trump wins Florida, and right now it's polling roughly, one poll was 50, 149, Biden, one is 50-50. They are trading right on top of each other. If Trump wins Florida, then you're going to need Pennsylvania. We're not going to know the results in Pennsylvania most likely for a week, 2 weeks. And there's a real case that Trump is going to declare himself the victor because if you're in that seat, you do the same thing maybe. And he's, he's a very different character. We've never seen anything like it in politics. Geez, I haven't seen anything in non-politics. And so there's a high probability. One of my old consultants who has worked for 4 different presidents, is one of the most respected economists there is. He has an 80% that we have no result 10 days after the election. That's terrible. It'll be bad for risk. It theoretically should be good for Bitcoin, but it'll be bad for risks. And so that'll be a little bit of a push and pull. But in a lot of ways, that's the base case. Scary.
Yeah. Yeah, well, it is. It's democracy under attack, and for this to be happening this year as well, it's everything seems to be pointing into some kind of implosion. But then it does point us back at Bitcoin. I did also, Mike. I took a look at gold this year. I've never owned gold, and I went through the process of looking into buying gold. I wanted to own it myself rather than have somebody custody it. And I'll be honest,
that's when it gets challenging.
Oh, it was, because I was like, I don't want to trust somebody else with it. I own my Bitcoin, so I want to own my gold. Like, I'm not rich. I'm not going to buy a lot, but I could hide it in my house somewhere, or somewhere else at friends or whatever. But I went into the process, and it was such a pain. In the end, I ended up buying more Bitcoin. Now, look, you're a gold guy as well, right?
I am. So how do I think about Bitcoin and gold?
Yeah.
Gold's been around for 3,000 years. You know how to buy it. There's futures, there's ETFs, there's, cash gold that stores in a vault. And so while I think it's a good macro hedge, the adoption curve is already there. And so why I like Bitcoin better is we're just early on that adoption curve. I do think they're going to go up or down together. I don't think you'll have an environment where Bitcoin's substantially higher and gold's lower. I do think more and more people will go into Bitcoin, especially as younger people get older, right? I mean, it's just simple, like every year you're a year older and you're closer to kicking the bucket. And as we have this generational transfer of wealth, Bitcoin is an easier thing for young people to understand than for old people. And so, but I do think they'll trade together. Again, Bitcoin's a lot more volatile. Right? What do you want to put the volatility of Bitcoin 50 to 80, or where gold's a quarter of that? And so your positions are probably smaller in Bitcoin than they're on gold if you're an institution. If you're young and you're trying to make money the first time, you got to take more risk, and Bitcoin's more risk.
Okay, so I guess on that kind of store of wealth, hedge against inflation, you go for gold for a bit of stability, whereas you will go with Bitcoin for a potential higher upside.
Yeah, and listen, it's doesn't have to be an either or. Like, I have both. I have a lot more Bitcoin, partly because I run a freaking crypto business. I have a whole lot more Bitcoin. But if I was talking to a really high net worth guy and helping them figure their portfolio, I'd say, okay, how much do we want in what I'll call hard assets, inflation hedges? Listen, there are other ones you do. You put the yield curve steepener on. And even equities. Equities are rallying a ton because people don't like fixed income or cash. And so where else do you put your money? And so, why the NASDAQ's correlated with Bitcoin is because it's that same mindset. It's like, I can't put my money in 30-year bonds at 1.25. There's zero chance they will ever return anything good. And so I have zero of my money in fixed income, literally zero. And I'm shorted, right? I'm shorted through borrowing long. I'm mortgaging my houses. I'm taking, loans from banks that'll lend it to me because I want to be short fixed income. Well, then where do you put your money? You can put it in Bitcoin, you put it in gold, you can put it in stocks, you can put it in real estate, you can put it in art. Baseball cards are starting to trade like crazy, basketball cards, NFTs. That's all the same trade. It's all the same story. It's saying cash is trash. I don't trust the people that are the stewards of creating cash.
I even heard front row seats at the Knicks are a store of value if you've got a season ticket.
I tell you what, they were a great store of value until they just started to suck. I had those seats for a while and finally gave up. I just couldn't take the pain of being a New York Knicks fan.
Well, you can't go and watch it right now anyway, which kind of sucks. All right, so back onto the Bitcoin thing. Obviously, I care about Bitcoin. I've got that kind of interest in gold, but I've got the real interest in Bitcoin. We've talked about there's a general kind of interest from institutional investors now. Is there anything missing? I mean, I've seen you talk about one of the biggest problems is there's a lack of understanding of what it really is. Do people still misunderstand what Bitcoin is?
Yes. Listen, you don't educate the world in 4 years. And you're thinking, okay, Bitcoin's 12 years old, but it's really not 12 years old. It didn't really hit the psyche until 17, 18. The mainstream psyche. And then it was, oh my God, it was this crazy bubble and it just fell. Bitcoin didn't fall 98%, but if you look at the total crypto market cap, it fell 98%. I mean, that is a beatdown, right? And so people are like, oh, glad I missed that, right? And so we're only now getting to some stability of conversation. We had a client that's very close, and the grandfather of a big family was like, I don't know, there's just too many of those coins. They just print more and more and more and more of them, and you've got to educate. No, yeah. Listen, there are a lot of pretenders. There's only one Bitcoin. And so each of these coins in the store of value universe is a social construct. I remember sending out a mean tweet about Litecoin once. I was like, Litecoin's the poor man's Bitcoin. It's just a glorified testnet. And I was shocked at how aggressive the response on Twitter was. I was going to hire a bodyguard. And to me at that point, I didn't really see the need. And I've changed my view a little bit. Not that I'm bullish Litecoin, I'm not. But I've changed my view that you could have smaller communities that care about their own store of value. And if there's a Litecoin universe, I don't think that pie grows a lot because I haven't seen any new money coming into those spaces. What I get excited about Bitcoin is I got Bill Miller, I got Winston Scotchers, I got Nikki Melker, I got Pete Brigger, I got Abby Johnson, I got Paul Jones. Those are all billionaires that have made their money in other fields. They're not crypto billionaires. They're billionaires that have made their money outside and have said, Jack Dorsey, there are 30 of them I can name that have said, hey, for part of my worth, I want it preserved here in Bitcoin. I believe in this ecosystem. And so I see Bitcoin as this biggest one and getting kind of all the new money coming into it. And these other ecosystems, it doesn't mean they all go to zero because, like I said, I learned my lesson by attacking Litecoin and getting attacked. Litecoin has Litecoin's got a passionate following. Ripple's got a passionate following. You can say, well, Jesus, they've got this big supply overhang. But man, oh man, they've got an army of people that continue to buy and trade Ripple. A lot of it's in Asia. And so it hasn't gone away. Listen, I do think Bitcoin SB and Bitcoin Cash, less and less, it's harder to drag new people into those ecosystems. And so we
don't really want to.
What?
We don't really want to drag people into those ecosystems.
Yeah. And so but for those guys, for Roger, for Calvin Ayers, his team, they have a harder and harder hill to climb to kind of get people excited about their stuff. You know, when you switch over to the protocol, the Ethereum world, like there's a lot of cool stuff happening there. And most of the intellectual capital that goes into our space goes into that universe. That's not the institutional mindset. That's the venture mindset. If we're going to see finance done spectacularly different in 15 years, it's good because what you're seeing now in DeFi and what you're seeing now in, you know, what I'll call that protocol world, Web 2.0. Like there's cool stuff happening there. We're not seeing a lot of institutional money move there. We see a little bit moving to Ethereum. We see venture money moving there. But I could see those ecosystems growing a lot faster than I could see Litecoin or SV or any of these other store of value coins. I just don't think they have the cheerleaders that Bitcoin does.
Yeah, I mean, I don't know. I keep away from it. I just think it's all junk. I just think it's when Bitcoin's volatile, they're like hyper volatile. But there's nothing there. I'd say, like, if you say, Pete, you can put your money into Bitcoin, but it has to stay there for 10 years. I'm not worried about that, and I know you're not. But I like if somebody said you've got to put it into another cryptocurrency for 10 years. I don't know if I want to.
I agree with that. Bitcoin is the only one right now that I'm positive of. I said this to a group of people yesterday. I was like, I'm positive that Bitcoin will exist in 5 years, and I'm 98% positive it'll be significantly higher. Listen, there's always shit that can happen in the world, and but we've de-stressed a lot of the regulatory risk. You know, even within the year, the Treasury in the U.S. has gotten much more comfortable with Bitcoin, and so I do think we'll have an ETF at one point. You know, you're going to see a changing the guard of the SEC. My guess is the new head of the SEC probably takes up the ETF issue.
Well, I mean, shares in MicroStrategy are essentially an ETF now.
Getting closer.
Getting closer. What do you think of the evolution of the market itself? Like, you know, BlockFi sponsoring this. We've got this maturing borrowing and lending market for Bitcoin. We've got maturing derivatives. We've got maturing custody. You know, are we there yet, or is the next step to see some of these big kind of like perhaps some mergers with some of the big brokers, them starting to pick up some of these companies?
We are on our way there.
Yeah, okay.
You know, we're a big player in derivatives. There are a few others stateside. It's not a giant liquid market yet, right? It's a lot more liquid than it was last year. It'll be a lot more liquid next year. Why derivative markets are so important is it gives hedge funds something to do, and so it creates that asset class. It's really hard to be a non-long crypto hedge fund at this point, you know, given the volatility and given the hedging apparatus. You can do it in small size. It's hard to do it in big size. And so as the derivative market grows, the structured product market grows, you can do principal protected notes to investors, and it just allows you to bring more and more people to the ecosystem. And so a lot of people love to snap their fingers and have us be there. It's an evolution. It's a crawl, walk, run on each new product. And so the great news is we're a lot further along today than we were 12 months ago. And there's been a turbocharge since COVID. Certainly in the Bitcoin adoption rate, but also in the overall crypto excitement rate, right? I'm doing a call this afternoon with the major G20 central bank and 5 big CEOs on central bank digital currencies. And people say, was that good for Bitcoin or bad for Bitcoin? I was like, dude, it's of course good for Bitcoin. Because as people switch their mindset to digital, Bitcoin really is digital gold. I don't believe we're going to use Bitcoin as a payment currency. I just don't. And so if it keeps this lane as digital gold, well, if you've got your digital currency, your digital gold, you know, the Libra wallet, which is going to be called Novi, which I like to think was named after me, but wasn't. You know, you're going to be able to buy Bitcoin on the Libra wallet. You know, so you get up to 2 billion people with them on their WhatsApp saying, give me all that Bitcoin. And so just— Is
that confirmed?
It's not confirmed, but it's on good hunch. And so you're going to see more and more easy access. And as the world goes more digital and more crypto digital, it just makes it an easier leap to do. And so
Well, what are the risks then, Nova? Because we're like, you and I are probably in a similar position where we think, I don't think of Bitcoin anymore as like, you know, where people say if it succeeds, like to me, it's already succeeded to get where it is. Yeah, it's here. But what are our risks?
I was in Abu Dhabi a year ago, and somehow I got put on a panel on branding, and I was on the panel with the guy that owned every brand in the Mideast, a wonderful guy from Kuwait. And I'm like, oh my God, what am I going to talk about? So I'm making it up as I go along. And I'm like, boom, it dawned on me. I was like, Bitcoin is the greatest brand that's been created in 12 years, maybe ever. It's got global dominance. It's in every village, in every country. It's not owned by anybody. It's got this mythical story. But I don't think Bitcoin would be Bitcoin if we knew who Satoshi was. I absolutely don't think so. It's this magic that it was like this piece of code that was floated in the river and the community raised it. And there's something to that narrative story that's similar to gold that came from the Aztecs, the Incas, the Egyptians. It was blessed by the gods. And so Bitcoin really is one of the great success stories of the last 40 years. It's one of the great brands in the world. I have a $200 billion market cap out of nowhere. Listen, Tesla's built a great brand, and it's not the only story in a short period of time, but it's one of them. And so, you know, what couldn't go wrong? Listen, if it succeeds too fast, maybe regulators and central bank governors could get nervous, but I think you're a long way. They don't get nervous about gold at all, and gold is, 20 times more valuable than Bitcoin. And so I think you got to just watch pace a little bit there. Everything we see is they're moving our way, not against us, but you got to monitor that. One of the major players having issue, like God forbid if Coinbase got hacked for something giant, would dent people's confidence. I think all of the big exchanges now, they have a big enough war chest that they can handle small mistakes, and they're good enough technology that they're not going to have big mistakes. But those are, when you're dreaming up like what could really go wrong. Listen, this is not a guarantee that Bitcoin price goes straight up, right? We could have hung election and people could get into a risk off. There's still a lot of leverage in our space. In some ways, I'm so envious of Wobi and BitMEX and CZ, offering 100-to-1 leverage and 50-to-1 leverage. Hell, I'm an ex-partner at Goldman Sachs, and when I trade equities at Goldman Sachs, I get 2-to-1 leverage. Right? I'm a wealthy guy. You can't get great leverage on stuff in the U.S. And we're offering, anybody 50-to-1, 60-to-1, 70-to-1 leverage on crypto. That's both really cool and really dangerous. But it explains why we have these air pockets and we have more volatility than we would. And so there's certainly ballets I can draw out where the Bitcoin price is right back at 8,000. And you're like, how the hell that just happened? Because when people are getting leveraged out, they're stopped out, there's nothing they can do. So we monitor that pretty carefully. I do think what you're seeing though is as institutions come in, they are a lot stickier money. And so we're seeing a changing of the guard a little bit, not necessarily that one group is selling, but as the pie grows, the portion of institutions, which was literally like 2% 2 years ago, is going to slowly start growing. And when that gets to 30, 40, 50%, it's a whole different market.
All right, listen, a couple of questions to go. How's your tattoo healing?
It's my fourth tattoo.
It's your fourth, is it?
I got a little mushroom on my arm.
I saw it on your. I saw it on your.
My daughter turned 25. Me and her friends were all down in Baton Rouge, Louisiana, and New Orleans, and there were no bars open, so we all decided getting a tattoo would be a bonding experience. And we had this company, Compass Pathways, that I invested in, day one investor, which was mostly luck, that had just gone public. It's now a $1.4 billion NASDAQ listed company. And so celebrating the kind of good fortune of being early on in the psilocybin train. And I was surprised at how all her 25-year-old friends really liked the idea of a mushroom cocktail.
I'm not. All right, listen, look, for the doubters, what would you say to the doubters? We still have some. What would you say to them?
You know, people used to think like I was crazy. And so I was having this argument with Charmaine Mosfendrani at Goldman, who wrote that kind of anti-Bitcoin piece. And she's wonderful. She's a buddy of mine. And she just wasn't there yet on it really being a store of value. And I asked her this question. I was like, okay, I've got Abby Johnson. Like, who do I need to declare they think it's a store of value? If Alan Greenspan came out, or Janet Yellen, if I had ex-Fed governors, if Trichet, like at what point is it just agreed that it's a store of value? I think we've crossed that threshold. We hadn't for her. And so I think for the doubters, it's time. And one of the things that's hard for a lot of wealthy people like their privacy. And what's unique about any store of value, but the Bitcoin community, is you do well by doing good. And so I'm constantly in a conversation with guys I know have bought it. I was like, hey, you'll do well for yourself and well for your community if you do what Paul Jones did and let people know you bought it, and you bought it because of these reasons, right? In lots of ways, the more advocates we have, the better. And so, you know, that's a personal decision. A lot of people like their privacy. You know, Bitcoin's a crazy. You remember when J.K. Rowling made a tiny thing about Bitcoin, and she was like barraged with Bitcoin the Twitter horde for weeks. And so I understand why some people are. I mean, there are 15 now fake Paul Jones accounts out there.
Yeah.
You know, we've got a pretty crazy and rabid community. And so some people, but I think that's for the doubters. You ask them that question, like, well, when? Like, what would it take? And when they think that way, they're like, well, yeah. You know, Pete Brigham is actually one of the savviest investors in the world. His funds are spectacular, and he's a distressed debt investor. He's not crazy. Mickey Milker is literally the best fintech investor of the last 20 years. He's not crazy. Wen says, okay, he's got the crazy hair. He might be crazy. Yeah. I mean, he's really a Bitcoin evangelist, but Wen has made a lot of money in a lot of other things. You know, Abby Johnson runs Fidelity. It is a very staid organization, right? They are Boston, conservative and slow. She's not crazy. And so that's the argument I have with doubters. It's like, who do you need? Phil Miller was the best, you know, S&P. He beat the S&P for 17 straight years. The only guy ever to do that. One of the best financials investors. He's not crazy. And so I can keep going on. And so, like, because it's just this idea of credibility.
All right, we'll close out.
Sorry for ranting so much.
No, it's good. I love it, man. Listen, I'm on side. Like to close out, give me one prediction. It doesn't have to be price, just anything at all. We want prediction that something's going to happen over the next kind of like 2 to 3 years.
Well, I told you I thought Bitcoin could get to 50,000. The other prediction I give you is I think that, you know, people say, oh, this was a DeFi bubble. And I think they're crazy. I think it was a DeFi frenzy in the teapot, and prices got stupid, and there were a lot of shitty projects. But I think we're going to look back in five years, and DeFi is going to be a really important place. And so we're putting, you know, maybe 5% of our capital to work there, but I'm putting a lot of the intellectual capital to try to understand what's going on.
Wasn't the prediction I was expecting. Well, listen, look, it's great to finally meet you. I'm going to have to get you actually on my podcast. We're going to have that conversation another time, but I think I might try and get you and Dan Moorhead together to knock heads and get some old stories out of you. But great to meet you, great to talk to you. And is that Tupac and Colonel Sanders behind you?
I got Tupac, Colonel Sanders, Deng Xiaoping, and Zidane Zidane.
That's a good mix.
Made out of hair. I don't know. I bought them at some art show once. I love like icons, iconographic art. I even got Leo DiCaprio over there as well.
Well, it's great to meet you. Hopefully I'll meet you in person some when planes are flying, and perhaps we'll go and get a tattoo together and talk about Bitcoin.
Awesome. Thank you.
Take care.
Awesome. And from the Benzinga team, thank you guys so much for joining us. Guys, if you don't know about Novo's background, I mean, he's invested across the world for decades. You know, the fact that he's interested here, I think, speaks a lot for the currency. So, guys, thank you so much for joining us on your very first Benzinga Boot Camp.
Thanks, guys.